move our Black communities forward.
We think our children have to have the best. It's all about discipline.
How are we going to discipline ourselves so that we're able to save, so that we're able to make good financial decisions?
Recognizing that there's a road ahead if you manage the road in front of you.
The decisions that you're going to be making today in your lives where it comes to money will affect you in the future.
Discipline is one of the things that we often learn, sometimes by our environment, or sometimes we're forced to do it, and sometimes we don't learn it at all.
Stores want to get us in and out and get our money, and that's it. It's a game, so you have to be really wise to the game.
Do you know what it costs to run your home on a monthly basis?
Land acknowledgement. As we gather together, we acknowledge the sacred land on which we reside. It has been a site of human activity for 15,000 years. This land is the territory of the Huron-Wendat and Petun First Nations, the Seneca, and most recently, the Mississaugas of the Credit River. The territory was the subject of Dish with One Spoon Wampum Belt Covenant, an agreement between the Iroquois Confederacy and Confederacy of the Ojibwe and allied nations to peaceably share and care for the resources around the Great Lakes. Today, this gathering place is still the home of many Indigenous people from across Turtle Island, and we are grateful to have the opportunity to work in the community on this territory. We are also mindful of broken covenants and the need to strive to make right with all our relations. Last but certainly not least, we acknowledge the people of African descent who were brought here against their own will or in search of a safe place to live their lives and raise their children. Reconnaissance des terres. En nous rassemblant, nous reconnaissons la terre sacrée sur laquelle nous résidons. C'est un site d'activité humaine depuis 15 000 ans. Cette terre est le territoire des Premières Nations Huron-Wendat et Petun, les Séniques et plus récemment les Mississaugas de la rivière Crédit. Le territoire était sujet de l'alliance de la ceinture Wampum plat avec cuillère, un accord entre la Confédération Iroquois et Confédération des Ojibwe et des nations alliées à partager et à prendre soin pacifiquement pour les ressources autour des Grands Lacs. Aujourd'hui, ce lieu de rassemblement est toujours le foyer de nombreux peuples autochtones de toute l'île de la Tortue et nous sommes reconnaissants d'avoir la possibilité de travailler dans la communauté sur ce territoire. Nous sommes également conscients des alliances brisées et de la nécessité de nous efforcer de guérir toutes nos relations. Dernier point, mais non le moindre, nous remercions les personnes d'ascendance africaine qui ont été amenées ici contre leur volonté ou à la recherche d'un endroit sûr où vivre leur vie et élever leurs enfants.
This webinar provides illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Black Business and Professional Association. The BBPA makes no representations, warranties, or guarantees as to assume no responsibility for the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use or reference to or lines on such material.
Good Saturday morning. It is another beautiful Saturday morning, and we're so elated to spend it with you and yours. And as we always say, tell a friend to tell a friend. It's not too late to join us on Community Space, the financial literacy program that speaks the language of the community. I am your host, Roderick Brereton, and today we're going to get into another exciting episode of Community Space. There's a saying that nothing is certain except death and taxes. And that three-letter word is like a bad word for so many of us. And today we're going to explore into tax with our supreme host and our supreme guest, Andre Smith. Good morning, Andre. How are you?
Good morning, Roderick. I'm pretty sure you were told a lot in high school that you're pretty good with words, eh? I
Well,
think you
yeah, you
can
know what?
pull the trigger.
All right, all right. Yes, my brother. How are you? How's everything this morning?
I'm doing good. I'm doing really good. Always excited to be here. And as you know, tax is one of my favorite subjects to talk about. That's my area of specialty. How about you?
All things considered, my brother, blessed and highly favored, can't complain. But tax is so intimidating for so many people. And
Mhm.
when obviously it comes down to tax time, I would say it definitely puts the fear in a lot of people because of just the not knowing and how much we're gonna have to pay. But one affluent person that I met several years ago gave me a good, also a good phrase about tax. He said, "When you're making money, you're gonna pay tax, and the more you make, the more you're gonna pay." So I guess we got to look at it that way. But nobody likes to pay it. Nobody likes to, unless I guess you're the government. Nobody really benefits from that tax. So yeah, we were definitely excited to learn what we can also take home in terms of taxes and also spread it to our community in that regard too. So folks, tell a friend to tell a friend. We're talking taxes today, and it's again a topic that we can't avoid, but we're going to get some amazing information with our host. Sorry, I'm going back now to host with our guest, my brother, Andre Flip Floss Smith. So put on your seatbelts and let's go.
All right, good stuff. And yeah, to your point earlier, so Canada does have a progressive tax system. I want to do a quick check-in with everyone. Like have my Irish shout out. So if you're in the house and you're Irish today, drop it in the chat. Let me know that you're here. Let me know that you're Irish and you're ready to talk about taxes. How's everybody doing today?
Let's hear from you. And also, let's get your Iries in there and let us know where you're joining us from this morning. If you're,
Good morning.
good morning.
I'm joining from Brampton, Ontario.
All right. Good morning, Brampton. Good morning, Ottawa. Good morning. Is in the house.
All right.
All right.
Anywhere.
All right, skip the music. All right, yeah. So let's have a really good discussion today about taxes. And as Roderick mentioned earlier, the more you make, the more you pay. That's because Canada has a progressive tax system, right? So the more money you start making, you go into a different tax bracket. But the reality, though, in Canada is you're taxed more based on the type of income that you make, right? So there are a lot of rules in the Income Tax Act that allows you as a person or business to minimize, your income tax. Personally, I prefer to earn income through business and investments because of the tax write-offs that are available when you do business and when you invest. But of course, I also recognize that as individuals, like you don't have a business or probably not investing as heavily to get those write-offs. I mean, there are write-offs available to individuals as well, but they're not as flexible as they are for people who are investors or people who have business, right? So one of the things I like to tell people, and especially in our community, is to adopt a tax planning mindset versus a tax filing mindset. And what I mean by tax planning versus tax filing mindset is that when you tax plan, you are looking ahead and you're thinking about all the different ways to minimize, the tax owing to the government. So you're thinking about RRSP, you're thinking about TFSA, you're thinking about RESP, and other vehicles that are available to you to minimize your taxes. Whereas tax filing is where you're waiting until tax time comes to literally file your tax, then to get a refund. Which I'm going to pose a question before I get into the discussion. Is it good, or do you actually, let me phrase it with you. Do you think it's a good thing to get a refund when you file taxes? So you can drop your answer in the chat, or you can come on and you know, say your name and what your answer is. The question again, do you think it is a good thing to get a refund when you file? Anyone?
A couple people are saying no there, Andre, but you know what? I'm not going to lie. The times I have had a refund, it felt pretty good to me.
Yeah. No doubt about it feeling good. For sure, it does feel good. And honestly, I it's the same for me, because sometimes I find myself in some cash flow position where you know, getting a decent refund makes a big difference, you know. All right, so I'm going to take a look at some of the responses here. So some people said no. For the people who said no, I want to hear why. I'm interested in hearing why you say no. I feel great to receive some type of money back. It's better I kept my money. Yes, I think it's good. I'm particularly curious to hear from the people who said no.
If you want to share why you said no, why you don't think it's a good idea to get tax back, we would love to hear from you. You could come on and just if you don't want to turn on your camera, you don't have to do so, but you can also share your voice and just give us your information if you so choose. So they
All
say
right.
manage my there. I think somebody's ready.
So what I'm saying is no. I've been running my business for a little bit, and even though, hey Brett, Roderick, how you doing? It's Ryan.
Good. How are you, my brother?
Yeah, it's one of those things where you're either giving someone else your money to hold, and then they'll tell you how much they'll give you back and how much you're worth. And sometimes they assess it in their favors. They never assessing it with all the things that may be deducted from your doing business. And you may not report everything you've done afterwards, because it's like another job to do that. But if I'm managing my money, then I'm assessing what I want to pay out at the end of the day, and I'm going to try and pull up all of my receipts to make sure that I get the maximum deduction and paying the less amount if I have to pay anything at all.
Okay, thank you very much for that.
All right. Yeah, no, I completely agree, you know, with the response. So like, you know, as a entrepreneur, you're thinking about, you know, cash flow, right? And having to pay, you know, taxes does affect your cash flow. That's money that could be put into, you know, expanding the business or invested in something, right? And potentially producing greater returns. Give me 1 second here. I'm not sure who's knocking, but you know, the other thing is, you know, from an individual perspective, as someone said in the chat, you're essentially giving the money interest-free loan for the entire year, right? So the fact that you're getting money back means that the government took too much of your income in taxes, right? And they're giving it back to you later on. And the problem with that is that the government is not giving you any return on your investment, right? So, you know, in reality, if you think about the interest and the future value of money, your money is essentially losing value because of inflation, right? However, I mean, it does feel good when you get a refund, right? And for some people who perhaps didn't work for the year and they get their HST or GST or some other types of, you know, payout from the government, you know, it's beneficial to you because no taxes was, you know, taken from you, right? So in those cases, it is beneficial. But for the most part, if you're giving the government too much money, generally speaking, in my opinion, it's not a good thing. I would prefer to have the money now. But we cannot ignore the fact that when you actually get that check, it feels really good. Give me 1 second. I've extended knocking on the door. Give me 1 second, Roderick.
Yeah, no problem. So while Andre tends to that door, let us know in terms of what your tax experience has been when it comes down to paying those taxes. Have you had to pay on an ongoing basis when it comes down to tax time? And you know, we usually just look at income tax, but obviously at every given moment, every time we spend, and especially in Canada, unless you have indigenous status and you've got that indigenous card, you're going to be paying taxes. So tax, I think it usually gets a bad rap at income tax times, but as we pay day to day, sometimes we don't recognize it. We're paying that tax also. So it's something that, again, it's inevitable. It's going to be here with us when we're in positive time, or when we're going to have to pay out what seems to be a lump sum after we just worked a whole year and just scraping by, but still have to pay again.
Yes. And I mean, I don't think there's any formal studies there to show like how our community utilize the tax system, and if we actually maximize on the credits and things that are available to us. But in my experience, as a tax preparer, a lot of times I see situations where people aren't even familiar with a lot of the things that are available as an individual or as a business, right? Because even when you look at tax preparation for businesses, for example, a lot of businesses, they have a tax filing mindset as well. What they would do is that they'll compile all their receipts, and they wait until tax filing time comes, again, just to add up all the expenses, and add up all the income, and they file, and if they owe, it's good; if not, whatever. You're not maximizing on the depth of what the tax regime in Canada has to offer, right? So yeah, I mean, we're going to be focusing on filing for individuals, but if you have business-related tax questions, feel free to ask them. I'm more than happy to answer any questions, because I do file personal and corporate taxes, so I have experience in both, right? But I'm gonna also address some of the issues that I see that are rampant within our community. For example, overpaying file taxes. I've seen situations where people are paying like $300, $500 to file one T4, obviously because they're not familiar with what is expected, and there are unscrupulous people who actually capitalize on this, right? I've seen it all the time, right? So I want to talk about software a little bit, and I want to talk about other situations that I see people find themselves into because they are unfamiliar, with what is it required. And just like Roderick said at the start, tax is one of those areas that really scares people. And honestly, it's similar to when you're first doing addition, multiplication. When you saw the multiplication table, it seems pretty scary, but once you grasp the basics, you're like, oh, this is a lot easier. And that's one of the things that I do, like empower and prepare people to file their own taxes, because the reality, as much as it is an income for me, and it's one of my first businesses in Canada, I'm big on community, and one of the things I'm big on as well is empowering people, so that they're able to do certain things that you shouldn't be getting ripped off in those areas, right? So who's required to file taxes? Let's talk about that for a moment. So an individual is required to file taxes if taxes payable. Before I go through this checklist, I have a question. So according to the Income Tax Act, there are 3 people in the eyes of the law, and these 3 people are required to file separate tax returns. Any idea who those 3 people are? And I'm calling people, but they're not all actual people. But that's how the Income Tax Act phrases it. I think it has like individuals, 3 types of individuals that are required to file taxes. Any thoughts around who the 3 individuals are that are required to file taxes?
I was gonna say the young, the old, and the dead.
That's funny. Actually, dead people are required to file taxes.
There you go.
Final return that they're required to file. So someone here says individuals and businesses, yes. That's 2. Individuals, corporate, and nonprofit. So getting close. So individuals and corporate is correct. Someone else says corporation. They're looking for one more. So we have individuals and we have corporations. Looking for one more. What do we set up for our family to transfer our asset when we pass away? What do we call it? Another word, estate, but I'm looking for another word. It starts with a T. Well, test it. Here we go. Eldon got it. Trust. So yeah, in Canada, there are three individuals that are required to file. So for individuals, we file what is known as a T1, and for corporations, we file a T2, and then for trusts, we file a T3. All right. So if you ever set up a trust, just know that you have to file a separate tax return on behalf of the trust. And the same thing for a corporation. If you have a corporation, you have to file a separate tax return for the corporation. If you're a sole proprietor, meaning you have your business, but it's not yet incorporated, you don't need to file a corporate tax return. You just need to file your individual T1 return. And there's a form that you use to add the activities of the business. I believe it's called T2125. So that is the form that you use to add the activities of your business if you're a sole proprietor. All right. So let's get into who's required to file. So if tax is payable, that is a situation where you've earned income, right, from your job, or if you've carried on business, right, as a sole proprietor or corporation, then tax will be payable because you have some type of income, and it is required that you file taxes. Some people will say, you know what, I don't have to file taxes because I'm pretty sure I don't owe the government. Like I have my day job. Last year I got a refund, so this year I know I'm going to get a refund, so I'm not required to file. Technically, you are required to file because you don't know if tax is payable or not, but you did earn income, which means that you're required to file taxes. I mean, the government is not strict on people, individuals who not file their return. However, if you don't file, it might affect certain things. I've had situations where people are trying to buy property, for example, and they come to me and they're like, "Oh, I haven't filed taxes for the last 7 years," and then they're trying to like get up to date, and it's they're putting pressure on the tax preparer, make mistakes and all of these things, but also you may miss opportunities, right? And I believe Roderick has a really good line for when opportunity, something along the lines when opportunity meets success or something like that. Roderick, you want to share the quote there if you know what I'm talking about?
Well, we usually say our definition of success is when performance meets potential.
Right.
But when when opportunity meets success, basically that is the definition of greatness.
Right. That's the one I'm looking for. Right. And so you always want to be prepared, right? For when the opportunity comes. So oftentimes we miss opportunities because we're not prepared. And of course, later on, if you ever have to apply for EI or other things like that, they might ask you for your tax information. So I strongly recommend staying up to date on your filing. Like I've never had a tax a year's tax filing outstanding for more than a few months. I'm always up to date, right? And it's really important if you're actually trying to integrate into other aspects of Canadian culture, right? And I'm not sure how many people here are immigrants, or most people on the call are actually born here. But whether or not you were born here or immigrant, it's really important that you file taxes. The other one here is the individual has a taxable capital gain or disposes of taxable Canadian property in the year. So taxable capital gain happens where you have a real property, right? So for example, real estate, or if you bought stocks and or cryptocurrency, for those who are familiar with crypto, the crypto industry is just collapsing. We can get into that in another discussion. But let's say you bought a house, for example, and you bought the property for $400,000. You have it sold at $600,000. Then you make a capital gain of $200. The difference between what you sold it for, the $600, and what you paid, the $400,000, is called a capital gains. Most people would call it a profit, but the reason why it's not called a profit is because of the nature of the activity. So if it is, for example, you're in the business of selling real estate, buying and selling real estate, then the sale of that house becomes a profit because it's the nature of your business. So that's the key, one of the key distinction. If it's what makes up your business and it's the activity of the business, it's a profit. If it is not the activity of the business and it's a one-off type transaction and it's a capital gain. All right. Now, in Canada, capital gains is taxed differently than regular income. So let's say on the $200,000 that you made in our example, you would only pay taxes at your marginal rate on 100,000 because the government only taxed half of the capital gain, right? Let's take that a little bit further. If you bought your first property and it's your principal resident, meaning it's a property that you live, Canada is one of the very few countries that has a principal resident exemption, meaning you pay no taxes on the sale of your primary residence, right? So that is a lot of money in our pocket, as a community. But alarming news such as us not investing heavily in real estate means that we're missing out on avoiding taxes on the growth of those types of income, right? And then the other area here where you might be required to file tax is where the Minister of National Revenue has issued a demand to file, right? So this might be for people, the government has been doing a lot of this. So if you collected CERB and the government believe that you were not qualified, they might say, you know what, we need you to file your 2021 taxes and your 2022 taxes because we want to see what's going on, right? So the government might demand that you file a tax return. And the other situation here is where a non-resident individual has a taxable capital gain. So one thing I always love to highlight is that a resident for tax purposes is different from a resident for immigration purposes, which means that you might have no citizenship or permanent residency status, but for tax purposes, you're still a resident of Canada. Similarly, you can be a Canadian citizen, but you're not a resident of Canada for tax purposes. That is where you've severed all your ties to Canada, and you move abroad. You may not be required to file taxes, right? So I just want to highlight that. Right? So these are some of the filing requirements. And as I've said, even if you have zero income, I still encourage people to file because sometimes the government is giving away HST, GST rebates that you can get. Sometimes the government is giving away that the carbon tax that every single Canadian receives. So the only way you can receive these amounts back is if you actually file your tax. All right. Any questions from anyone? Everyone's good so far?
So far, so good. It looks like we don't have anything per se in the chat. Somebody just said they got back a deposit of 588. So congratulations. Nice. Don't spend it all at the same time.
Do some Christmas shopping there. So when is the deadline to file? So if you're an individual, if you're an individual, your deadline, of course, is April 30th, right, for individuals. If you've conducted business, so if you're a sole proprietor and you've carried on business, then your deadline is June 15th. Oh, give me 1 second again, Roderick.
Yeah, no problems. And we would love to hear from you in regards to how do you prepare for tax time? Do you just file your T4s if you are working for a company, or do you just put together your T2s? Do you do that throughout the year? Do you just wait till that tax time? I think a lot of people just wait to that tax time, but if you're in a business, if you're a business owner, one of the things that I can honestly speak about in terms of my experience is continually having tax preparation as a part of my process, so it doesn't just dump on me at the end of the year and it gets really stressful. So we'd love to hear from you. Do you prepare for taxes, or do you just deal with it when it's there? All right, I think we're back to Andre.
All right, sorry about that, everyone. So yeah, so April 30th. If you don't have any, balance owing, then you'll be fine as an individual. You can file it later on without consequences, right? But I strongly encourage that you keep up to date with your tax return. Usually, there's a penalty if you don't file on time, right? So if you have a balance owing and you don't file on time, that's where you'll get penalized by the CRA. If you're an individual that carries on a business, so let's say you have a sole proprietor business, then your deadline to file the actual tax return is extended to June 15. However, if you have a balance owing as a sole proprietor, you have to pay that balance by April 30th to avoid any penalties. And you might ask yourself, how would I know what my balance is before filing this tax? You can estimate it, and you can look at the previous year. So if your sales was around the same for the last year, and let's say it was 3,000 last year, you can estimate again this year, you can pay 3,000. If you overpay, you can ask for the government to refund the excess, or if there's a shortfall, you put the difference, but it will minimize you getting any penalty, like late penalty or late interest or anything like that, right? So that is how you would figure out how much to file with a balance. Sorry, if you've carried on business, right? So just to highlight that, but most people, in my experience, whether they're carrying on a business or not, they usually file by April 30th, right? I must say, like, I've had I find businesses to be more on time with their tax return, because the one thing with the CRA is if you don't file and they keep demanding and you don't file, they're just going to freeze your bank account. So of course businesses have to be a lot more mindful about those things, whereas for individuals they're a little bit more lenient with certain things.
How often does that happen, Andre, when an account would get frozen if you haven't filed? And I guess how many chances do they give you if you communicate with Revenue Canada?
That's a good question. I don't know if they have like a hard and fast amount of attempts, but usually you get a lot of they'll reach out to you quite often. So it will start with probably some phone calls. They'll send some notices to you. You mail it to your home. They'll send it online. So they do give you a lot of notice, right? And sometimes they'll call you to work out payment arrangements. So they really try to work with you before. I've only seen it happen to one client, but this guy is delinquent, meaning every single year it's the same issue. And they've given him multiple notices for probably over 2 years. And he didn't comply. So they froze all of his bank account. And if you have money in it, they just automatically withdraw it until they recover what's owing plus penalty, right? So they're pretty flexible. From the one case that I've seen. Like I said, I don't have enough experience to know whether, like, if they have a hard and fast rule in terms of how long they will remind me and whatnot. But I think it really depends on who is handling their file.
I had an account that was I had my accountant who was delinquent in his execution of his duties. So much so that when I asked questions, he threw my files out the door. And so when I went to another accountant and I had my filings prepared, he had to go back 10 years to see all of the mess that this particular accountant, like, he was trying to make sure that I got discounts here and there, but in so doing, he was also not filing doing the due diligence of my files. So as a business owner, it affected the way that my cash flow operated. It affected the way that I even viewed my business. It affected the way that I could project my business, because it was just, here's a little bit, I'll try and take some from here. And while in the short term, it helps in my cash flow, in the long term, it fails to allow me to grow my business exponentially, because I don't really know how my business is operating. Needless to say, once my taxes were filed and I had about $20,000 worth of the tax owing over the 10 years, with interest being about 2/3 of that, because it just accumulates and it builds up. So now $12,000 of interest they're calling you down. They're calling you down every day almost, and it's worse than that than when you're owing on a credit card, because they can threaten to. And the more information you give them is the more access, because when you give them your other bank accounts and so on, now you've given them permission to explore your entire portfolios. And now they can exploit all of those once you have exposed it to them. So it's important that you protect your businesses by complying with your tax commitments. Otherwise, they can really know everything, and once they have it once, they have it forever.
Yeah, completely agree. Thanks for sharing that. That's some good insights there, and that's why it's so important to adopt tax planning mindset, right? And it's hard because at the end of the day, as a business owner, you're not a tax preparer, but this is where your professional comes in. Is there anything that I can do? What are some best practices? For example, I'll tell my my small business clients, hey, set up a special account where you're taking out setting aside money from early for taxes. Because one of the things that happens for a lot of people is that throughout the year they're earning, they're not thinking about taxes, and then when you file, it's boom, $5,000, $10,000, $15,000 tax bill, and it becomes hefty to pay all of that at once. So what you can do, you can estimate based on your monthly income or your quarterly income how much tax is owing on that amount for the quarter. You set it aside in a special account, and I've seen this work perfectly with one particular client. She's the one thing about this client is that she listens and she implements, right? And I've showed her how to set up her Excels, how to set up things to manage, everything. And I've also told her about setting up the account to set aside the tax early. She's the only person that I've seen done it, and it works perfectly for her. She files her taxes. She always have money set aside to file taxes, right? So it's speaking to your tax preparer or your tax professional, your accountant, whatever the case is. But it's also important that you implement these best practices, right? Because it will help a lot. But also, go ahead.
Can I just add a comment to that? If you still remember where you are, there's a book called, hi, my name is Denise. There's a book called Profit First, a really interesting book written by a gentleman who had failed businesses. And one of the things he suggests is exactly what you're saying. Set up an account where you put some money aside for exactly that. What he actually said was take like 2% of whatever's sitting in your bank account every 15th and every 30th. You look at what's sitting in your bank account, you take 2% and you move it there over the years, every month, 15th and the 30th. And he also suggested that for owners' compensation. So if you start a business and you cannot take a salary based on the fact that there is not enough to go around, then you also do the same thing, 5% or whatever, until you build it up to where your sales are growing, etc. So I can share with you that I've been in both places where I've had to pay my HST, where it just felt really good to know that the money is there and I could just pay it when it was due. But I've also been in that position where, especially since COVID, I've owed money and it was very painful to pay that. And so it took a little while to get it done and get it paid. And now there's interest on there. So there's both sides. And honestly, if you can prepare yourself, it's a really good feeling to see whatever it is, the funds are sitting there and you could just pay it once you know what the amount is.
Yeah, thanks for sharing that. Completely agree. And, that's why, if you're conducting business, I'm not sure how many persons here are actually entrepreneurs. So perhaps we can just do like a quick check, drop a line in the chat. If you're a sole proprietor, you can say SP for sole proprietor. If you're a corporation, you can put CP in the chat. So you get a sense of how many people here are actually business owners. But staying organized, I know for individuals, it's much easier to stay organized, but as a business owner, there are some challenges. And these are challenges that affects our ability to scale our businesses, right? Because we don't have for example, proper financial documentation of our financial information. Like, can you accurately state what your income is from your operation? Can you accurately say what the expenses are? A lot of times I see people, they come to file a tax and they're like, they only have receipts for 3 categories. Usually, the ones that they always have receipt for is rent and the motor vehicle expenses. But I'm like, what about office? What about meals? What about all these other things? What about advertising, right? And so, again, that is money, coming from our community. That's money that could be coming back to our community, right? So, keeping detailed information will actually save you a lot of, money along later down the line. So let me see here.
One of the things that has recently happened to me is that the government has actually sent me a notice prior to even calculating my income taxes with my tax preparation person, saying that I owe $34,000, and I was like, how do I owe $34,000 prior to even filing? But I guess it's just based on an estimate of the previous year. And so I guess they encourage you to do it in installments so that you're actually preparing for your taxes as opposed to, or giving the government prior to, filing that tax. So
yeah,
I guess it's one of the options that people could do, as you were just mentioning there, just to prepare for that, tax time also.
Yeah.
That defeats the purpose again that we started with.
What was that, my brother?
That defeats the purpose. We say we want to keep that money as long as we can in our bank account.
You're absolutely right. And I think, when I talked to my accountant about it, they said, they want to get their money, sooner than tax time. Well, unfortunately, that's not going to happen this year. But, once my accountant does the taxes, then they'll get it.
Yeah. And I'm glad you brought up that point about the CRA assessing. So they love to do that. They'll estimate. And even if you don't make that much, they'll estimate it and they won't care. But the other thing that, with business that I've come to realize, and people here can comment on this, is like, you're not always going to get your cash flow cycle perfectly, especially when you're just starting out and, you're doing so many things. And there are times when you have to make hard decisions in the interest of cash flow. You literally have to prioritize, just like a household. You may know that this person is coming after you for this particular bill. And you're like, you know what? If I miss it, it's only $45. But if I miss this one, it's $3,000. So you have to ration those choices. And I've done that a lot, right? And, it's easier to make those rationing when you actually have you have a monitoring system in place where you're accurately keeping track of information. But I do understand that from time to time we have to make rationing. For me, because I always factor in time value of money in all of my decisions. And when I talk about time value, I'm talking about present value versus future value. I'm also thinking about the impact of inflation, right? So because I think about all of these things when I make any type of money decision, the majority of the time, I will try to earn money, right? So like if I have this tax account that I'm setting up, I'm going to explore the best interest rate that I can get so that I can, make some money on the government's money until that time comes, right? So that's the type of rationing that you can also put into play, right? Because the reality is that the government is doing the same thing with your money, right? They're taking your money and they're doing all these other things, right? So while you have the money sitting there, you definitely want to make sure that it's producing some type of interest, right? So I'm going to talk. Let's flip back to the individual side. Now talk about some of the things that I see that affect us, as individuals, similar to businesses, right? The first one that I feel like affects a lot of people. So, I've seen situations where people are panicking because they're like, I don't know how I'm owing the government. Like, I work my job, my employer takes the tax, and maybe last year or 2 years ago, I got refunds, and so I don't understand why am I owing right now. In a lot of cases, my first question to that person is how many jobs you had last year, right? So multiple job situation oftentimes creates a situation where you owe the government. Why? So think of it this way. So if you have employer A and employer B, right? So employer A deducts $40,000 from you. Remember, I don't know many persons remember, but usually when you just start a job, they give you this slip to complete, and it tells the employer how much tax to take out. And if you don't have like a specific amount that you want them to take, they will tell you to put the required minimum, right? And they'll ask you about multiple job situation. So if you have a job that pays $40,000, employer A will deduct the correct amount based on $40,000. That could potentially be 15% or 20%. So now let's say you have employer B that you're making another $40,000 from, and employer B does the same thing, right? They're collecting, 15 or 20%. But when you actually go to the CRA, when you file your tax, all that income, the both $40,000 becomes $80,000. So now you're in a new tax bracket based on your $80,000 income, which could potentially be a 26% tax bracket. So now there's a shortfall of the amount of tax that you pay. So that's usually what happens when you have a multiple job type situation, is that you're placed in a different tax bracket, right? Or you didn't pay enough tax because each of the employer wasn't deducted. So if you have a multiple job type situation, there are a few things that you can do. So you can ask one of the employers to deduct more, right? But like I said, personally, I don't like to get refunds. So that wouldn't be my first option to ask an employer to deduct more. But that is an option, to ask one of your employers to deduct more because you have 2 jobs. But I also understand that some people don't want their employer to know that they have 2 jobs, right? So that might not be the best option. The other option is that you can contribute to your RRSP to cover the shortfall, right? So if you know that you have 2 jobs, these 2 income coming in, you prefer a refund while saving, then your best bet would be to maximize on your RRSP contribution. So that way you get to save. You also get a refund when you file your tax return. But keep in mind that multiple job situation usually result in you owing. The other situation that I see is that, and I see this more so in some of the service type jobs, like if you're working at a factory, or if you're working for a cleaning agency or a staffing agency, oftentimes your employer will employ you as an independent contractor or a subcontractor. So they'll use those terms. And what happens is that they give you, and a lot of times they don't explain what this means to you. So they'll tell you, okay, you're a sub or independent contractor, and then you work, they give you quote unquote what is the full amount of your income without deducting any taxes at all. And so when you actually file your tax, when tax time comes, they issue you a T4A instead of a T4. Now let me ask you a question. Anyone knows what the impact of getting a T4 versus a T4 is? So if your employer said, no, you're not an employee, you're a subcontractor or an independent contractor, and they give you a T4A, what is the impact on your taxes versus if you got a T4? Any thoughts?
Well, I think you're paying taxes as a individual, but you can also deduct certain expenses if you were coming with your equipment and or you have other clients and not an exclusive to that particular organization. But if you were an exclusive to that organization, you're not getting your deduction, your employee contribution to your taxes and CPP. So therefore, you are covering all of that, and the employer is left off the hook from paying that contribution to your retirement fund.
Exactly. Here you go. You summed it beautifully. So yes, if you get a T4, and I see some people saying the same thing here in the chat. Let's see, Catrice and Juliet saying similar things here. So if you get a T4 of, your employer is responsible for deducting your taxes and all the other deduction, and they give you the net amount, right? And they pay over your taxes to the government, right? You still have to file your tax return, but they handle all the withdrawal of the taxes and the remittances to the government. Now, if you're a contractor and you get a T4, you pay your own taxes, similar to what Juliet is saying here. So you have to figure out how much tax is owing. And oftentimes you don't know that until you actually file your taxes. So by that time, what I usually see happen, people are faced with a huge tax bill and they don't have any receipts because they didn't fully know that they needed to be documented receipts, to claim certain expenses. They didn't even know also that they have all of these expenses that they can deduct, right? So if you ever hear as an individual, your employer say you're an independent contractor, or subcontractor, you want to always clarify whether or not the employer is going to be taking any taxes, or you can ask if they're going to be issuing a T4 or a T4A, right? Because the T4 is a statement of remuneration paid, which means that your employer, will be responsible for taking out and sending your taxes to the government. And the T4A is a statement of other income, right? So you will find things like, income as a subcontractor or contractor, or if you've gotten certain grants or scholarship from the government or CERB or other things like that, will come on the other income form, right? So really important that you figure that out, especially at the start of a new job, so that way you don't find yourself in that situation. And I've seen that happen for years with some people, and they don't even realize what is going on, right? And then, the entrepreneurs here, the sole proprietors here are probably familiar with T2125. I did mention that earlier. So this is a statement of business activity, right? So this is where if you're a sole proprietor, you'll add this form to your taxes and you'll detail your income and your expenses, all right? I won't get into, we'd have to literally do another workshop if I were to go into like deductions available for individuals and businesses and things like that. But if you're ever in doubt, I would just say, Google or ask your tax preparer if something is deductible. There are many tax software out there. I will give you a list. A lot of the software, they are free, right? Which means that you can go in and input the information from your T4 or your T4A or whatever the case is, and you can file it for free. Usually, the softwares that you pay for, those are more like for tax preparers. Like if you're filing multiple tax returns, then you might have to buy software. But that link right there on the CRA website, it gives you access to. Oh, sorry, this is not the one I'm looking for. This is the payroll deduction. Why is it taking me to that link? Oh, sorry, I have the wrong link here. My apologies. But if you were to Google tax software or CRA approved tax software, let me do that right now. Give me 1 second.
So with okay.
Go ahead, Robbie.
No, I was just saying that often we're not familiar with these free applications or these free softwares that are available for us to do our taxes, because obviously they encourage us to pay for them, right? But it's always good information to see that there are free applications that we could use, or software that we could use just to get our taxes done. And would you suggest, and maybe it's a question because you are a tax preparer, that people attempt to do their taxes individually, or should they get somebody to come in and do them for them?
Yeah, good question. And the software that I would recommend, yes, let me answer the question first. So definitely, because people think it's harder than it really is. And if your tax situation is simple, let's say you only have a T4 or you have 2 T4s, I do recommend doing it yourself because it's really putting in your demographic information, for example, right, which is your name, your date of birth, your address, and your SIN number, and just going in and then searching for the form, right? I mean, if you're comfortable with software, you'll be able to move around in the software which is why I recommend Wealth Simple Tax, because it's very easy to use, it's user friendly, and it's just going to the forms and type in T4 or statement of employment income, right? And once the form comes up, it's literally just taking the digits. So on your T4, all the boxes are numbered, and it's simply taking the information from the box and putting it in the box in the software. So, for example, income tax deducted on your T4 is in box 22. So you're literally taking the exact amount from box 22 and putting it in box 22 in the software. And once you've completed all of that information, if you have no other, nothing else to deduct, so for example, no student loan, no out-of-pocket medical, etc., it's just a matter of submitting that return as is. If you have two T4s, then you want to, the only thing that you have to do here is that you have to complete 2 separate T4s in the software. So you have to put it for each employer. And the software allows you to do multiple T4s. And that's it. And I've seen situations where people have that one T4 and they go and they pay $100, or they pay me $50 to do it, right? And I always encourage people to file. I mean, because there is my conscience as well, where I'm going to be like, I know this is super easy, and some people still opt for you to file it. But if you're ever thinking about whether or not you're capable of filing your taxes, I will tell you, once you've attempted, it's easy. If you get it wrong the first time, the CRA will correct any error, and they will send you a statement saying, hey, we've corrected these amounts based on the information that we have on file, right? So the CRA will correct it. And you might be asking, why am I telling you this if I'm a tax preparer and it's a part of how I make income? Because I'm also an advocate for Black wealth, and I want to see money stay in the community and not go out for reasons that it doesn't need to go out for. All right. So to your point, Roderick, yes. And like I said, in terms of choosing the software, I send the link. But for individuals looking to file for the first time on their own, I would recommend Wealth Simple Tax because it's very easy to use and it's free. Any questions?
Now's the time for questions for Andre Flip Floss Smith. As they say, there's no such thing as a dumb question. The only thing dumb about it is not asking it. So if there's any questions, please do ask.
Yes, I have a question.
Good morning.
My name is Andrew. I live in Brampton, and I have a corporation, a computer corporation. Sorry, my kids are in the background.
All right.
And what I have a question around notice of assessment. Sometimes I find the government comes up with this reassessment, and they said like you miss an item that you were supposed to have on your filing, and it was like $16 and the compound interest. Now you owe us $2,000. I always thought that was a criminal activity by them. And what I'm asking is how to really check that the CRA is actually doing the right thing and is also not making mistakes.
Mm-hmm. I mean, so one thing I want to highlight is that you have the right, I don't have the specific timeline, I think it's 30 or 60 days, but you have the right to dispute any decision by the CRA. So if the CRA writes you to say this is the case, you can dispute within a certain time period. You can dispute by taking out the phone and calling and asking for clarification and say, hey, I don't agree with what is going on here. How did you come up with this information? Right, so that gives you an opportunity to clarify where they've gotten the information from. And it could very well be a mistake, right? And if it is a mistake, you can submit documents to justify why they're wrong in their assessment. Or you can do a formal objection by, going to, I don't remember the name of the form, but I know if you search objection form, you can do this through by logging into your CRA account, your My CRA account, and you can complete an objection there to dispute formally the information that they've mentioned in the notice of assessment. So all you have to do is just state what was said in the notice of assessment and refer to the assessment by putting in the date, the income tax year that you're filing for. Or you can, mail the objection. But what I would say about that, because I don't know the specific issue that you're speaking of, the first step in situations like those, if you disagree with the CRA, is to call them to find out from their end where this information comes from. And if you still disagree over the phone, then you can formally object. I don't know if that help with what you're asking.
Well, you give me enough to start investigating, and yeah. So give thanks for that. Yeah, thank you.
Yeah, no problem. Yeah. All right. So we can talk, briefly about financial statements and balance sheet. Not much time. This is more for individuals with a business. And I think I spoke about this earlier, but I strongly recommend that you keep track of your income and your expenses if you're a sole proprietor. The other thing that I want to say, and a lot of people, some people will pay attention to it, others don't, but for capital assets, so for example, you've acquired $5,000 worth of computer equipment. A lot of people will put this $5,000 in their income statement when they file their business tax. The reality is that this is not an expense, it's a capital asset and it gets depreciated, which means that you should be claiming something known as a CCA, which is a capital cost. Can't remember what it is for, but something along the lines of allocation. So you should be claiming CCA and not putting the entire 5,000. I mean, a lot of times, because of the volume of returns that the CRA gets, they might overlook it, right? And so you get away with like classifying, your office desk and other furniture as an expense or equipment or any types of asset. You get away with the classification of expense, and for years you go on with it. But the CRA might step in at some point and say, "Hey, I've looked at your information for the last 3 years, and we've seen that you incorrectly classify assets as expenses. So we're going to reassess you." And the impact of that is that you're going to owe a lot of money, right? So it is important that, as business owners, that you're getting the classifications correctly by stating what is an asset and what is an expense. The other side to this is that, if you're looking to grow your business or if you're looking to sell your business, there are different ways that you can value your business. You can use your income statement by using a multiple to say, okay, current income is $1 million, but in the next coming years, expected to go by 2. So you can use a multiple of 2 to value your business. That is the easy way. Or you can use a balance sheet. But a lot of people tend to look at the health of the balance sheet, right? And so I've seen a lot of small businesses, there's no balance sheet present. So there's absolutely no way for a bank or an investor or anyone, to see whether or not your business is healthy, right? So that classification piece is really important. And so I just put this here as an FYI to business owners, because I've seen a ton of mistakes there. And people often get away with it, but I think it's okay. But you don't want a situation where they're reassessing and you're owing a lot of money. All right, so I see a question here in the chat for paid accounting software. Is the software expense itself a deductible expense for corporation? Yes, because it's needed to conduct your business. So yes, it would be a deductible expense. Question here again. If you are a corporation that has earned less than 30,000, do you still need to charge HST? Great question. So the correct answer and the technical answer to this question is that no. If your earning is less than $30,000, then you do not need to collect HST. However, there's always the however, when it comes to taxes. So I personally, and you can ask other peers for your opinion, I recommend collecting HST. So for all my businesses that I've ever done, I collect HST from the start. Why? Because the CRA has what is known as an input tax credit, which means that HST that you collect on behalf of the government, you can write off HST that you paid for goods and services. So what usually happens? So you are collecting less than $30,000. You buy a piece of computer equipment for $5,000. You pay HST of, let's say, $800, right? Normally that $800, it's gone. There's no way to recover it, right? However, if you collect HST on behalf of the government, even if it's below $30,000, so let's say you collect $700 in HST on behalf of the government throughout the year, because you've paid $800 HST, you can offset the HST and recover $700 of HST that you've paid, and you only have to pay the government $100. The opposite is also true. If there's a situation where you paid, let's say you paid $800 in HST, but then you owe the government only $600, then the government owes you $200 in refund, HST refund, right? So that is why I strongly recommend that you collect it so that you can benefit from recovering any HST paid. All right.
That is such a strong motivator to put it in your HST. The other option is also true, is that the moment you go over that $30,000, you owe HST on everything you have collected. So even though you didn't collect that money, you still got to pay that 13% to the government now. So you've now earned even less and having to pay. So it's better for you to collect that money and collect it and put it aside in that second bank account, because that can accumulate. But then when you deduct them, you're also increasing a profit workflow that can now go to your taxes on that alternative bank account, because we are paying taxes on everything, food, everything. And so all of that, like I've had this year, I literally earned way less than I've earned in the last 20 years. And as a result, I still spent more than I have earned in the last 20 years this year. And I now have an HST give back because I've paid more HST than I've earned than I've collected HST.
Yeah.
And it mattered.
It does, yeah. Good point. And the other thing I want to say as well, and I've seen this a lot, and even from me in my early years, something that was an oversight. But actually, when you pay taxes, you know that taxes are deductible business expense, right? So if you pay taxes, you can use that to minimize your tax owing. That is the income tax side of things. The other piece is the fees that you pay your accountant to prepare your tax return. That's a business expense as well, right? If you're ever in doubt about what you can deduct, the government website is usually cumbersome and hard to navigate, but I must say they've done fairly decent with putting out the information out there to help you. I mean, sometimes the language is a little bit technical, but they have a website, somewhere on their website where you can search the deductible expenses for businesses. So there is a search option. You type in the expense and it will tell you whether or not it's a deductible expense. And in some cases, they'll list and give you examples of how or why this is a deductible expense. But as a rule of thumb, what I like to say is, any expense that you incur to carry on your business, right? So any expense that you incur to carry on your business that is reasonable is a deductible expense. And the reason why I added reasonable, this is not just me throwing reasonable, but there is a reasonableness clause in the Income Tax Act. So what do I mean? So let's say you have an admin assistant, that's your spouse or your child, and you're paying that person $150,000 per annum. The CRA will step in and ask, is this reasonable? And in assessing reasonableness, the CRA is going to look at what is the fair market value for an admin assistant. So how much is it that a normal admin assistant would pay? So if they come to the conclusion that a normal admin assistant usually get $50,000 for a similar work, the CRA will only allow you to write off $50,000 and deny everything else, right? So it has to be reasonable. So expense carried on. So any expense that you incur to carry on your business, that is reasonable, right? And that definition is really broad. So this will be based on the nature of your business. So if in doubt, think about that definition. But there's also a lot of information online where you can, drill down for specific expenses.
And I think also when we're looking at, just making that $30,000 threshold, and if that's going to be the reason that we pay tax or don't pay tax or HST, I think obviously just when we're looking at business overall, and wanting to make money and for it to be profitable, that shouldn't be a reason that we don't make over 30,000. Like, we should be wanting to do, just the process right, but obviously not paying tax when we don't have to. And I think that's obviously where tax preparation and just understanding of, what is, it could be used to, to go work against your taxes, to reduce them. And that's where the preparation and professionalism comes into play. So yeah, definitely. I've heard some people say, I don't want to make over $30,000 because I don't want to pay HST, and it's ridiculous, right? And I think we just got to see the bigger picture. When you are making money, you are going to pay tax. It's how you can offset some of those taxes is where, obviously, again, the professionalism and the understanding of how to go about it comes into play.
Yeah, 100%. Canada, has one of the most complex tax systems in the world, but it also provides a lot of taxable benefits, right? And the benefit will come if you know what you're searching for. So that's why it's really important to ask your accountant question. And this is where the experience will come in, because anyone can tax file, but not everyone knows the depth of what is available, right? So if you have a preparer that's just preparing your taxes, of course, you're just going to get preparation services. But if you're looking for planning, this is where you probably want to speak to a CPA, my recommendation. So I'm not a CPA. Just to be transparent, I started CPA, but I'm not, this is the profession. I personally just didn't enjoy it. So I withdrew from being a student. But I would recommend speaking to a CPA to really tax plan, especially if you're making more money. If you start to make anywhere close to $200,000 or more, I definitely start having conversations with a CPA. There's one thing I wanted to highlight here based on a question that was asked by Catrice. Is it $30K per year or per quarter? So it is $30,000 per year. But how the CRA worded it, I think there are a few parts to it. And I think this is something along the lines of the moment you estimate that you will make $30K per year. So if it is now, let's say you're in your third quarter of business and you're already at 27,000 or 25,000, and based on your current level of sales or sales orders or whatever that's out there, you estimate or you can foresee that it will hit 30K or more, then you are required to start collecting HST. All right, so I just want to highlight that. So it's 30K or the moment you feel or you believe based on your business that you're going to make hit the 30K mark. That is when you're required to start collecting HST.
We also have another question here.
Yep.
Somebody asked if you could speak about dividend payments and how to best document this on your taxes.
When you say document it on your taxes, are you asking about like where to file for dividends?
Eldon, if you wanted to, yes, he said correct.
Can't remember is it and I see Camille, but I think it's on your T5. You should get I don't remember what the statement is called, but it's I think it's the T5, the investment statements, of course.
Yes, it's called a T5, yeah.
Right. So you'll search for the T5 and you'll find it here. Here's the other piece though. When you're filing dividend, you want to, so they have a dividend tax credit. A lot of people don't know that exists. So you want to search for some forms, you can some software, you can search for dividend tax credit and it will take you to the specific section. I don't know if Wealthsimple does it, but what I would search for as well if you're claiming for dividend is which line to claim the dividend tax credit, because there is a dividend tax credit that allows you to gross up the tax. It's almost like it minimize the amount of tax that you would pay on the dividend, whether it's a qualified or non-qualified dividend. So that's what I would do. I would put in the T5, the dividend amount, and I would, if it's a qualified word, I think it's eligible. You have eligible dividend and non-eligible dividend. So usually when you get the T5, they'll tell you if it's an eligible dividend or non-dividend. So you take the T5, you put in the information as is, and then I would probably search which line to claim the dividend tax credit for eligible dividend. And then I would make sure I make that claim so that you're maximizing on the taxes where the dividend is concerned.
We also have a question from Lucky. Good morning, Lucky.
Yeah, good morning, everybody. How are you doing today?
So far, so good. How are you, my brother?
I'm doing great. Unfortunately, I joined late. I just wanted our speaker to please just throw some more light on what is the best option for a small business owner, dividend or salary, and what will he recommend? Which one is the best? And probably there are some good reasons why one method is preferred to the, or why one is preferred to the other.
Sorry, I didn't get the full question. You asked about ways to compensate yourself as a small business owner, and which one is better? Yeah. Okay.
Yeah, which one is the best, and maybe why? Okay.
Yeah. I mean, what I usually say about that question, it really depends on your objective, right? So if it is, let's say, because I've seen business owners where they only take out enough income to pay their rent and probably like some, they flow like a lot of the expenses through the business. So let's say your rent is about $15,000 or $20,000 per year, and that's all you're taking from your business. Then potentially filing that as income could be fine. Why? Because if you actually look at in Canada, so the income tax on a income of about $16,000 or thereabout is about 15%, right? However, the credits that are available to you, such as your employment credit, your work tax benefits, all those other credits, they actually add up to 15%, which means that on the first, so that tax bracket, let me see if I can pull that up here. 1 second. So this tax bracket, Canadian income tax bracket. So this income bracket here, the first income bracket, and that's 15%, 49,000, which is what 49,000 or less, which is why most people in this bracket, once your employer deduct your taxes correctly, that's why you usually get a refund. Why? Because this bracket, the 15% is equal to the 15% deducted. So the deduction rate for example, what's that tax credit? Canadian tax credit. Just trying to find some of the tax credit, but let's use any one of these, the working income tax benefit. The deduction rate that the government uses for most tax credit is 15%. So for example, if the government says, let's see here, find one. I can't think of any credit, but let's use the employment tax credit, for example. If the amount is 500, or I think it's 2,000 something, employment tax credit, Canada. Yeah, so it's 1,287. The inclusion rate here, as you can see, the inclusion rate is 15%. And that is the case with most of the tax credits that the government gives to you. So what does that mean? If you're earning income in this bracket where it's 15%, it means that the credits will offset the 15% tax. So that's why people earning 49K or less usually have a situation where they're getting a refund or they have no tax owing or a refund because the credit is equaling the tax the bracket. Once you go outside of that bracket, that's where it starts to change the dynamics, right? So if it is that you're earning in that bracket just to cover your expenses, then I would say, you can potentially maximize by giving yourself a salary because the credits that are available to you would offset or eliminate all the taxes. Or you can do a hybrid situation. So let's say you have, you're claiming about 15,000. Usually there's no tax. Once you start going over 15,000, that's when you're gonna have an owing situation. But let's say you're claiming 15,000 as a salary. So you can say the first 15,000 you're gonna declare that as a salary, so there's no tax. Then you probably want to declare some dividend, right? So you probably declare dividend because dividend you're taxed a little bit more favorably. So you can you can bring up your income with some dividend, or you can potentially say that you're selling some shares or whatever the case is, or issuing bonus. So there's no, it's the point that I'm trying to make is that it's not as black and white. It's really dependent on your individual situation or your specific objective that you're trying to achieve. But for the most part, what I see people do is that they will do a mix, or they might just take dividend from the business. So with dividend, they're just declaring dividend income, and that's taxed more favorably, and you don't have to worry about filing any T4s or anything like that, right? Hopefully, I didn't cause so much confusion there, but the answer is it's really dependent on the situation at hand.
Yeah. All right. If there's any more questions, please bring them right now for our guest, Andre Floss Smith. Bring your questions now. So, Andre, what would you, in terms of tips, suggest to business owners, entrepreneurs, what they should be doing in terms of just preparing for tax time? Should they be doing like a monthly statement and having their accountant to understand where they stand, or is it just usually best practice to have it done at the end of the tax year, fiscal year, and then just put it all together then? Is there any benefits from doing things prior to tax time, or does it really make a difference?
Of course, yeah. So good question. So you definitely want to figure out, for example, your salary and how you're going to get paid. You want to sort that out, because there is a thing called appropriation that is a tool available to the CRA that they can come in and based on where the money is going, they can say, what, this is all income to you, and a lot of taxes assessed on that, right? In terms of the books, personally, I go for automation. So I'll use accounting software that keeps track of all the expenses. I do that. I used to do it weekly, but now I do it more so monthly, right? Because of time constraints. But doing it monthly allows you to keep things organized, right? So you want to be organizing your income and your expenses every month, so that year end you're not scrambling, you're not trying to find this receipt, etc. The other thing is where receipt is concerned, I recommend that you try to upload the receipts, create an electronic version of the receipt. So what I typically do for receipts that I didn't get through email is I'll staple the receipts on a sheet of paper, and I will scan that, and I'll store that, because over time, the receipts that fade, and you're required by law to hold your receipts for a period of 6 years as a business, right? And as I mentioned earlier, to set up that special account where you're setting aside money to pay taxes, and then having the conversation, with your accountant around like making even investment decision, to expand, like your asset base, or write off more HST, right? So you can invest in asset to capitalize on HST, right? Those are decisions too. And then the other important thing is, exploring the credits. For example, CCA, which is capital cost allowance. So you want to look at capital cost allowance as it relates to the motor vehicle, as it relates to furniture, as it relates to computer equipment, right? Because these are amounts that a lot of people usually overlook, right? So you want to explore those credits that are available to you. You also want to think about, so for example, for meal, you're actually required to create a meal log for every meal receipt. You want to say, you know, who you met, why you met them, etc., and what was the money used for. A lot of people do not do that currently, and I've had situations where the audit starts with 1 year, and because the first year is so messy, the audit goes back like 3-4 years, and once you can't prove it, CRA goes in and they will deny every single meal and motor vehicle expense that you can't justify, and then you're going to end up owing a lot of money, right? So the biggest tip is staying organized by separating your setting up your salary first, keeping a separate business account, setting up or try to at least automate your finances, because at least with automation, even if you don't do it monthly, you have the ability going year end and just classify the transaction, and that can be done quickly. Whereas if it's manually, you're gonna have to go through every single receipt individually to figure out what's going on, right? So try to automate your books. You can use FreshBook, you can use QuickBooks, or Xero, or any one of those accounting software. But also having a system to track, you know, why you're purchasing meal, as well as a vehicle log to say, you know, where you're traveling to and who you're meeting, right? Those are often overlooked. And then lastly, start having conversations in advance with your tax preparer to see, you know, like what you can capitalize on. So like you bought some equipment this year, you've done this, you know, what can be written off, right? If I incur a business loss you can use to write off income, and you can also do it for previous years. So let's say we're now filing tax for 2022, and there is a business loss that I incur in 2020 or 2021. You can actually go back and use the business loss to write off some of the income in the previous year, and you can get a potential refund. So those are things that you won't know unless you're having these conversations, you know, with an experienced accountant.
Tax provider. All right. Thank you very much for that information. Again, always a pleasure to hear the information that you impart in the community. And we encourage you all who are on the Zoom with us this morning to not just keep this to yourself, but to tell a friend that, you know, there are options, and that there is a lot of information out there available to us when it comes down to taxes. And we encourage you to not just be intimidated by the tax laws, but to understand them. And if it's too complicated, to get a tax preparer like Andre Smith to work with you. And Andre, if you could just please leave your information for those people who may be interested in exploring your services more in the chat, that would be an amazing thing. And yeah, definitely, again, we have this tax that is it's inevitable in every aspect of our lives. So we just need to understand it more and just to work with it. Obviously, a lot of people are doing tax preparation, but not all tax preparers, as we know, are created equally. But we definitely know Andre is one of the credible and reliable sources in our community. So please do give him a call if you need some help in tax preparation. And on that note, before we close up for the day, we're going to say happy birthday to our CEO at the BBPA, Miss Nadine Spencer. So we're wishing her a happy birthday. Today is her birthday, and we just wanted to say thank you for all that she does for the BBPA, and extending warm wishes to her. And we also wanted to thank our sponsors, RBC and the David Reed Estate. And on that note, we're going to say see you later for another week. Actually, we're going to be taking 2 weeks off, and that next week is Christmas Eve, And the week thereafter is New Year's Eve. So we'll be taking the next 2 Saturdays off, but we will be back on January the 7th with a brand new year and brand new material for Community Space. So we're wishing all of you happy holidays, stay safe, and have an enjoyable time with friends and family. And we will see you back here on January the 7th, same time, same place, right here on Community Space, the financial literacy program that speaks the language of the community. Take care, everybody. Community Spaces, the financial literacy program that speaks and reaches the community. Are we going to be in a better place, or are we going to be still, quote unquote, behind the 8 ball?
Because of the historical disadvantage that our community has, we most times do not have financial role models. Without that, economically and financially speaking, we'll always be at the bottom.
Keep proper books and record, because the data drives the strategy and the strategy drives the profits.
COVID-19 sort of removed a veil. It's really exposed the structural barriers that our communities face.
These last 2 years, where there's been a heightened emphasis on the well-being of Black people, has influenced the influx of funds and opportunities. The time is now. How long is that window going to be open?
We'll see you next week. And don't forget to tell a friend to join us here on Community Space